So this one's live, like almost all of my shows. We're going to talk about the real estate market and what we should be expecting the rest of this year. Let me take out a crystal ball that I don't own, but I am reading this amazing book, by the way. If you haven't picked up this book, and I haven't seen a lot of people talk about it before we get into real estate, it's called Big Debt Crisis: Principles for Navigating Big Debt Crisis. There you go. It's by Ray Dalio, and it's made out of these 3 books. It's like a compendium. It's like pretty cool. Anyway, so far so good. It's got a lot of graphs. I'm learning a lot on the financing side that I didn't learn in college or in law school, which is great. But let's get right into the real estate market. As it stands right now, the real estate market is now kind of stabilizing when it comes to the interest rates. About 3 weeks ago, we saw interest rates just kept on going up. Are they going to reach 6? Are they going to go to 7? And then all of a sudden, they kind of just stabilized in the low fives, which is nice to see. So that's been over the last 6, 7 days. They're just low fives. And obviously, if you've watched some of the other videos, you know why. It was baked in that the Fed was going to meet 8 to 10 more times this year and raise the rates. So they're like, you know what? Let's just kind of know that that's already going to happen and increase the mortgage rates so that they kind of match that. So we'll see where they end up. They should remain there in the fives, maybe low sixes by the end of the year. Now, with the real estate market heading into spring, because it's typically cyclical and regional, but usually in May and June and July, we see a hot real estate market, which is starting to pick up even more, right? It's the opposite of what these people were saying. We're saying it's going to crash. Maybe at the end of the year, we're going to see a 10 to 20% decrease in real estate. I'm like, are we reading the same data? Because I don't see that. And I'm glad that I found this article. Besides, I found a ton of article and a ton of research. Let me share with you this great article first so that you can see with me how reasonable and how much of common sense these people have. This one's called it's an opinion piece. The housing market is about to finally cool off. Now let's read through this. It says, don't worry, a crash isn't happening. Well, great. That's good to know. That is especially good news for first-time home buyers. Obviously, they've had a hard time right now. They keep on putting offers in and out. And let me tell you, we have multiple buyers that are looking for homes in the millions in price points, and they have to just keep on pushing it up. And that's in California, where everyone says everyone's moving out. Well, it's the actual opposite. Let's go back to this now really quick. If you scroll down to the bottom right here to the middle, it says homeowners generally are on a solid financial footing right now. We're talking about where we're at right now in comparison to 2007 and have significant equity in their homes. That's very true. Buyers are purchasing homes they can afford without resorting to risky, exotic financial products like they did before in the last housing crash. So let's set that as a boundary here. When we're talking about comparing 2007, 2008, 2009 with the current market that we're in, most loans, all loans that are being given out are typically to people that can actually afford the home. I mean, I was in the market in 2004, 2005. I was a real estate agent then too, just like I am now. And man, anybody could buy a home at that time. It's completely different right now. So we're selling, not me, but the mortgages are being given to people that are responsible, that can actually afford this stuff. So let's go back into this one. This is a great article as you keep on. I'll put up the link in our YouTube channel so you can watch it there. It says the market will take years to rebalance from its pandemic trends. And I love it because there's another article I'm going to show you that shows why. And they went over different panels and different housing experts to show that at the end, it's important to recognize it for what it is. It's not a crash, but a move towards a healthy market. And this other article that I'm about to show you explains to you why. Now, you see here, this one came out March 24th, 2022. So about a month and a week ago or so. And if you read this with me, let me scroll in, let me zoom in here. Most panel members expect inventory, we're talking about inventory, to reach pre-pandemic levels by the end of 2024. Now, to understand pre-pandemic levels, you have to read this little paragraph that I'm going to highlight and zoom in for you. In the survey, experts were asked were asked what year they expect to see inventory return to at least a monthly average of 1.5 million units. The most optimistic was 4% answered by 2022, right? Which, I mean, we're already behind. And further, 37% answered 2023, which is about right. They're expecting 2024. Most frequent answer, 38% of respondents said by 2024, we should be reaching 1.5. Why is that important? Well, look, total inventory has fallen from a monthly average of 1.6 million units in 2018 and 19 to just over 1 million in 2021, and a monthly figures is lower in 2022, and that's true. So look, if we're significantly lower in inventory, and that's significantly lower in inventory, and in different regions all throughout the United States, what does that even mean? There are not enough homes for the demand. So even if the interest rate, which has gone up a little bit, even if the interest rates goes up a little bit more, the demand is still there. And in heading into May, June, and July, when the market is hot, nothing's going to happen in the next few months, right? And if the rate continues to go up even higher and higher, then we can talk. The way that the world is right now, with our economy, some inflation, pretty high, and maybe some recession going in. Some people already see we're already in a recession. We'll see, right? But the way that it is right now, the market's not going anywhere. Let's read the data clearly together, because a lot of us here use our emotions to really dictate how we read the market, and we're hoping that the market drops because we want to be able to buy an amazing deal. But in all reality, that's not going to happen. So pay attention. Here's another graph that shows you where they think, because of the lack of inventory, right? And it looks like we're like 500,000 below the average. When will that reach the norm? It looks like most people say by 2024. That's what we're looking at, because now we're looking at numbers, because at the end of the day, just like my video on Friday, this is an affordability and an inventory problem, right? The demand. Go back to that video, watch it, watch my other videos. Please subscribe now. Look, if you have questions, please ask, right? Because what I'm looking at right now, when I look at the data, when I read all these different books on the economy, on real estate, and I've been in real estate for almost 20 years at a high level, right? We're living this. I'm living this with you. Ask questions, because sometimes I may not be thinking of something, and your comment there or your question, I may be thinking deeper, and I'm like, damn, that was a good question. So do me a favor, comment, add some questions, and do me a favor, subscribe, watch this again, share with somebody who needs to see this, because I'm going to keep on coming back to you as the market shifts, as it goes through the rest of 2022. As we stand right now, 2022 looks like an amazing market for real estate. It's going to continue to expand. In some areas, they will drop a little bit in prices because they're overpriced. But like I said, mostly the demand is there. You just have to open your eyes and see it. You don't have to like me for telling you the truth, but the truth is the truth.